Hey everyone, welcome to Smart Investing. Today is June 15th, 2023. The time is almost 1 o'clock, literally like just a minute off 1 o'clock. Markets are open, and today's video is going to be about the continuation of the banking services sector. Another announcement that we have here on Monday, this coming Monday, you can see markets will be closed on June 19th in observance of Juneteenth because I think last year was the first official day that they made it a holiday. It's not really a national independence day. They decided to make it a holiday because the government wanted an extra day off. They voted that into law and whatever. It is what it is. So, moving on from that, talking about a little bit about the past in the market. I think I've been out for a good solid 2 weeks that I haven't been consistently been doing videos. But in the past 2 weeks, the AI frenzy and momentum is still going on. It's still hot. People still like it. Wall Street likes it. The government hates it. Yesterday, interest rates were held at a pause, so no increase on the interest rates or no declines. So in a way, that kind of throws off my base case for thinking about how to project the stock market. I was calling for a recession in late June and early July, but since the interest rates haven't been raised, and also Wall Street is still, I wouldn't say even past the last 2 weeks. I say close to a month. Um, it's like the government is, the Fed is doing actually a good job. People might hate me for saying that, but it's true. They want the economy to struggle a little bit because of what everything has been going on. Because easy money from prior years has been too easy, and things have to get tightened, and we have a crap load of debt. So things are trying to change in the real world. Meanwhile, in the stock market, Wall Street wants to be bullish on AI, which is fine. But the problem with that is that the tech sector, and it only takes a few names with the tech sector that pretty much rules the whole stock market. So you only have about a good, really, I don't know, let's say a solid 12 to 15 names. But out of those 12 to 15 names, you could say about 10 of them are in the tech sector. So with that said, with those 10 that keep pushing into the market with money going in it and people keep investing in it, because Wall Street seems like they're starting to do the same playbook in 2020, which is what I'm noticing. And even though there are pockets of other opportunities, meaning there's other downside momentum in other industries, Wall Street just wants to stick to the same playbook in 2020. So apparently, we'll see what's going to happen, because if the rest of the year all they want to do is the AI push, then that means the federal government is going to try even harder to knock down the stock market. Now, with that said, it's crazy because, like I said, I was predicting a minor correction or a crash, or definitely new lower lows by the end of June and early July, which is only a few weeks away. But like I said, I'm not changing my mind, but the timeline is going to have to be extended out even further because again, with the whole AI situation where Wall Street just keeps piling in money into these AI stocks, like the big names, Microsoft, Nvidia, and then you have Google and uh, Broadcom, like all these other names where are getting piled in, and then it ruins the whole market for everybody else. Where they try to find other pockets of opportunities depending on the strategies. So, anyways, I want to get that out of the way and say that I don't really know what my timeline is going to be because again, this makes it that much harder. Uh, so you have the Fed trying to slowly crash the economy, but then Wall Street is opposed to that because they want to just bring up the stocks and they're getting greedy and they're getting very, very selfish and careless and reckless, in my opinion. So this is going to be very troublesome and very difficult for the feds. So, with that said, uh, things are going to get tougher to manage. And what I mean by that is now everything on a watch list has to be even more active. So instead of me watching stocks and stuff and other things going on month to month when it comes to finance, things have to be looked at now like day to day, like week to week. So now it's actually a shorter time frame and a time frame in which things have to be more active and more readily available to make a quicker decision based on all the info that is being presented. So what I'm saying is investing, I think starting from now on towards the rest of the year, which is the second half of the year, is going to be pretty tough. And like I said before, I mentioned a few months ago, during the start of May all the way to October, usually it's a sell month. But again, May has been an upward trend month, which is extremely weird. Extremely weird. That rarely happens. So for June, I can't really tell. The month is not over anyway. So again, things in June have been, I don't know, sort of on an uptrend and then kind of flat for the most part. So again, it just makes it that difficult. So my timeline for the recession, I don't really know, to be honest. But I tell you this, the federal government has, well, not the federal government, but the feds have hinted that they want to raise interest rates again towards the end of the year. They don't know by how much. They've taken it month to month. So things are going to just get really, really tough investing in the market. So anyhow, moving on from that, we're going to look into the banking sector services stocks, see what's going on with that, see if they're still on a downtrend. I'm sure they are. And that's only going to make even certain stocks go lower and certain stocks go even higher. So again, I know there's going to be winners and losers, but the way this is playing out, it's definitely very one-sided. It's not really going to be random because again, the 2020 playbook was the AI stocks. So that means I think the banking sector is going to continue to go down while the technology sector is still going to be on an uptrend. So you can't win them all. So something's got to give, is what I'm saying. Something's got to break down for the stock market in order to go on a downtrend. So again, very overextended. I'm being very, very cautious. I'm not really investing. I'm just laying on the sidelines, putting in cash on the side, and letting things play out because this uptrend, I really think this is a fake rally. People might strongly disagree with me, for saying that, but it's just too much too fast. That's one rule that I've always thought. When something is too good to be true, then it is too good to be true. So I'm not getting caught up in the hype. We still have to realize that we're still supporting Ukraine in this war. Tensions are still being driven against China. Uh, the presidency will be elected for next year. So the end of the year only has 6 months left. So this is going to be a very crucial year. The whole debt load crap, they're still getting situated on what they want to cut and what they want to improve, since Republicans have pretty much taken the cake with the decision versus the Democrats. So when they passed the debt ceiling, the majority of the rules and regulations or whatever they have embedded into the system is most likely favored towards the Republican Party, and Biden just pretty much signed off on it just to kind of bypass, the default thing. So I don't think we're out of the woods yet, is all I'm saying. So the timeline, it's going to be later down. I don't even know, to be honest. Who knows, next year or maybe towards the end of this year? Who knows? So anyhow, let's move on to the banking services sector. We have here ticker symbol ABCB. So ABCB, markets are still open. So we have, let's look at the first page. Excuse me if I am too slow looking at this, because they upgraded the software a few weeks ago. So, I mean, it's minor change, but just the visual aspect of it and navigating around the app again, I have to familiarize myself with this. So I hope you guys can just bear with me as we go. So we have here, always at the top page that I look at, market cap 2.44 billion. So ticker symbol ABCB, Ameris Bank Corp. I'm sure there's a longer name than that, but that's the shortened name for it. So we have here earnings per share is at 4, a dividend of 0.6. PE showing me that's undervalued. Price to sales, and then they have price to book. Let me move my pen elsewhere. That way I can, there it is. So we have here the chart. Let's look at the 5-year. Let's look at the 1 year. So it's actually gained back up in May and stood flat in June. We're starting to stay flat in June. So here we are in March, where right before the downtrend. So it still has a bunch of movement to go up, even if it wanted to become neutral again, back to its former highs, which I doubt would happen. And we're going to see more pockets of downtrends in the banking services sector. That's going to be my guess towards the banking services sector for the end of the year as well. So let's look at the shorter time frame, last 3 months. So pretty much evened out, and we're still looking for a continuation of either an uptrend or a downtrend, and it'll be hard to get that higher up into the uptrend all over again. Moving on to the next page, which will be, let's see the feeds. What do I have for the feeds? I do not have anything for feeds. Sage Tracker, I don't know what that is. Institutional ownership, I'm not too crazy on looking at that. Institutional holdings. Let's look at the analysis. There we go. So analyst ratings, they have it at 43% buy, 14% strong buy. You add those up, that'll equal 57%. So the majority of Wall Street would agree and say that it is a buying opportunity. Again, they say that for a lot of stocks. I don't really care about that, but we're gonna look into the other rating that we have here, which is the quant rating. Based on what I see from this stock, gonna analyze what it is. So I don't see any growth. I don't see any value. Quality, I don't really see anything. The only momentum maybe, but anything else, this stock is not really good for anything. You can't really use this stock for any kind of strategy. So I'm gonna have to say no and keep it off your watch list and find another bank that can be much better rated than this. Overall rating for this stock was a 3 out of 5 for the quant rating. I don't know how and why, but that's what Webull gave it. I disagree. I'll stay away from this stock and just try to find other stocks. I don't know if you guys are interested in looking at the dividend history. I guess I'll show that real quick. But other than that, I don't think this stock is even worth looking at, to be honest. But I'll go through it anyway. We have actual earnings here that have been presented to us. I don't have the Q2 earnings yet. So it looks like they missed in Q4 and they missed in Q1. The debt levels, that is one of the most important factors to evaluate. 87%. We look at that from year to year. So pretty much about the same. They stood about the same in the debt levels. It don't look like they're paying off debt. Let's see what they have for their margins. Year to year, they've slightly gone up and down. So from 2018, it looks like they went down the year after that from 26% to 23%. Then they went back up only 1%. And then they really did good from 2020 to 2021, which that increase was at least a 12% increase. And it has been maintained about the same in the 30% range after 2021. Slight drop, but again, still in that 30% range, which is considered to be pretty high margins, to be honest, compared to its history year to year. Income statement. Have they been gaining income year to year? It looks like they have been. I don't know how or why they developed that much of an amount, but it seems like they know what they're doing. So balance sheet, that's not gonna impress me much. Cash flow would be the only real reason. So they have negative cash flow on top of that. Negative cash flow. So again, ABCB, awful stock and company. And find another one, which will be, let's see if we can have NTB. Bank of, I don't know what the NT stands for, so Bank of NT Butterfield and Son. So this stock is a $1 billion company, 1.4 billion dollar company to be exact. Share price is at $20.20 in real time at the moment. So we have here earnings are 4.643, and then dividend yield 6.24. PE is at 6. Very undervalued stock. I'm not quite fond of it. Not liking this stock too much. Can see here it looks pretty flat up and down, looking pretty flat. Not much of a gainer, more of a loser. It's lost more than it's gained. If you were to draw, basically, if you were to draw a line right in the middle, you see more drops than gains, and that's pretty much how you can tell how it has been doing thus far. Not only for the past 5 years, but even for the whole year. So if you were to cut this, I don't know, around there in half, you can see clearly that this drop here is starting to go up, but then it still has a lot of room to grow, which I doubt will grow that much. So moving on from that, the chart. So again, the chart it still needs work. But again, with the AI frenzy, I don't see it going up anytime soon. So I still expect this to be flat and then going on a downtrend slowly once again. Aside from everybody on Wall Street being bullish for every industry, that's just not the way it works. So moving on from that and going to the analysis part again, Wall Street is saying this is a buy rating, 100%. I disagree with that. There are other stocks, better stocks than this. Now, question for the quant rating, like we always do, can we use this stock for any kind of strategy? Can we use this for day trading? Not really. It doesn't have enough volume or anything, and not enough momentum to pull off anyway. Not much price action at all anyway. Even a month-to-month day trading or swing trading, again, the income is awful in the process, and in order for you to kind of bait this stock into people to buy it, it has to have some kind of worthiness to it. Does it have any value, any quality? The value is definitely there, but again, the banking sector as a whole is pretty awful. So the banking stocks are not really a popular stock. So again, it's better off to find other quality companies that are out there. So for growth, I don't see that happening. Quality, I'm going to say no. Momentum, no. And income, I'm going to say no. So again, it's a respectable market cap. But again, the numbers just don't support it. I mean, we have here Q2. Well, let's start from Q1 2023. Looks like they beat it, and it looks like they're flat on their earnings. So, I mean, earning estimates, even though they beat in the earnings estimates. Now, debt, it's just like I say, the banking industry is a hard industry to support because their debt levels, the balance sheet, their business model, the way they do business, and try to engage with customers or try to initiate new business or current business. It's just not my preference. I mean, to each their own, like I always say, but the banking sector specifically is not what I'm interested in if I wanted to invest. I'm not too crazy about it. Income, revenue. Income has actually has gone up. It's gone down from 2018 into 2020, then obviously going up from 2020. So I'm not surprised with that. The debt asset levels are still in the low to mid 90s. Doesn't look good, and something's got to give. We have their cash flow here. Let's see, we have 500 million. So they're pretty much breaking even on their cash flow, and what they have left is their net income. So net income Sorry. Net income for the year was 214 million. So again, they just don't have the cash flow to support it, and they're not a huge company anyway. So for NTB, I'm gonna say no, and move on to the last one, which will be CFB. Cross First Bank Shares. Sorry about that. For a second, I thought I saw CrossFit. So we have here, within the last 5 years, big drop, then a slight gain, then another big drop. It looks like it's going to try to gain. So again, very cheap stock. This might be a decent stock for it to grow, even like $1 or $2 and get out. But given the circumstances, it'll be hard to do. We had a nice movement here from $10 to, I don't know, a dollar and change. And this was within the last 3 months. This was actually in June. June, there was an uptick. I'm surprised, really big uptick. So we see here in the month of June, and then dropped down on June 5th, went back up a few days later. So this might have some momentum, very, very tiny momentum. So on the fundamentals side, I'm going to say no. So for long term, no. Short term, maybe. Maybe add it to a watch list on the short term. Wall Street analysts, they rated this 20% buy and 80% hold. So hold meaning just look at it and watch it. Pretty much don't do anything with it and see what happens. I can see way more momentum than actually what they gave it for the rating, 3.76. I give it between a 4 and a 5. Or in the low 4s. Quality, I'm gonna say no. The value, let me look at it real quick. Value, so they're not giving dividends, okay. And let me look at the company fundamentals a little bit deeper real quick. So it looks like for Q1 they've beaten estimates. Q2 they haven't given me anything. So let's see if debt levels are at 90%. My gosh, they went up. It's not good. Income has gone up tremendously from 2020 to 2021. These are big numbers, really big numbers. And then revenue has gone up every year. Operating income is not giving me anything, which is awful. Cash flow, this is really going to be the big decision here. So I'm looking at 2022 and just compiling all the numbers in and see if it's positive or pretty much laying flat, or if it's going to go in the negative. So we're already down, let's see. 357, so 360 plus 80, so 60, so 440 million, and they are in the hole for negative cash flow. So again, for the long term, awful stock, I'm gonna say no. And the volume is still too low for it to have some price action. If the volume was way higher, then maybe we might have a better chance for that. So moving on from this stock, so there we have it. We have none of these stocks are any good stock selections or nothing to put on your watch list. So thank you guys for hearing me out for earlier about the update. I just thought I'd get that out there with the stock market. So again, I'm going to continue with the banking sector. Thank you guys for watching. I'm going to make 2 more videos after this. I owe it to you guys and I owe it to myself. So stay tuned. I got 2 more videos to go.